Hey guys, so it's 28/1/2025. Let's do a post market for the previous day and pre market analysis. I'll go over gold first. So let's start from the daily. So as we can see that the daily candle was bearish for yesterday for gold, and we dropped about 400 points from the start of the candle. Let's drill down to 4 hours. So we had like a consolidation of two candles during 7:30 and 11:30 and 15:30 candle, the 4 hour, we had like a rejection. Then 19:30 we went down. So as you can see, if you consider each 4 hour candle to be one trade, it would equate to 1 to 3 trades. Okay, 1 to 3 trades, per day in a pair, as I say. So let's drill down and see how the 15 minutes looks. Okay, so if you see, this is the 15-minute intervals, and so 6:30 we had a 15-minute rejection. It was a possibility for a trade. So if we held it for that whole interval, it's 200 points. So I feel like this is one trade setup. Okay, I mean, let's check with this chart here. Okay, yeah, I think we fell from here. Okay, and I wanna see 1 hour. See, even if you drill down to 1 hour, you see that 6:30 was the fresh 4 hour candle, I think, open somewhere here. We rejected for the 1 hour, and for 2 hours we went down, and then we had sort of a push back up, but continued to the downside. Because if you see in the 4 hours, you will see that the 4 hour was bearish. So it was easier to trade till then. And 1:30, this was London Open, and London Open we just shot back up. See, 1 2 3 4, nearly 4 candles went straight up. And right after the intersection of London and New York, London New York pre-market sort of, and I've always seen around this time, around 4:30 p.m. to like 5:30 p.m., there's always a directional shift. This is what I call. Okay, there's something called as directional shift that happens in the market. One is around that Asian range. This was the directional shift we saw till 12:30, and then again 1:30. If you see, this is one of the time for that directional shift in the market which takes place. And you can see, as I said, another time frame which is 4:30. Okay, after 4:30 there's another directional shift that took place. And if you can drill down this in 15 minutes, you also get a clear confirmation. See here, 1:30. Okay, we had a strong price trying to push back up. Then 1:30 we had like an upswing. So I feel timing is very important in the market, because timing and price momentum goes hand in hand. So when I say price momentum, like where the price creates more volume in one direction, or price shifts. Let's put it as price shifts or price momentum and timing. I'm not sure which sounds better. You guys can decide the name, whether price momentum or price shift. mm, I would consider it as of now as price momentum and timing, because it gives you the momentum you need to take the trade. Okay, so timing is very essential in market at times. And if you see 15 the 17 15 5, we hit this rejection level, a strong rejection, the equal high. Okay, if we had to go to the upside from here, we would create a pullback, around these levels to the 50%. And if the trend is to the upside, we would not go down but push up higher. It would create a higher low. Okay, higher low. But what it did, the price just kept going down. And you could identify this easily with the 4-hour candle, because the 4-hour would be bearish. So it's a good indication that the market has the potential to swing lower. So I always say trade in the direction of the higher trend, like daily or 4-hour, because what happens is market usually follows the structure of the daily scenario. So the market dipped all the way till the last 4-hour candle. So considering the 4-hour time frame, let's see there is like 6 4-hour candles a day. This was the first one for January 27 January. This was the second, third, fourth, fifth, and sixth. Okay, and after this is like, let's consider this like the fresh candle for the next day. And now if I go back and show you that, see, this was the consolidation candle. Like, I'll also upload a systems course which I made, so in that I go over this also, but I'll explain this again. So if you can see that the 6 4-hour candles in a day, in that, how I've assessed is 30% of the time the market would be consolidating. Okay, and the rest 60% of the time market can be trending. So if we consider 30% of 6 candle, which is basically 2 candles. Okay, and if you see that 330 candle, we rejected, but it was like a smaller candle than the other 4-hour candles here. See, this 4-hour candles from 7:30 to like 22 23:30 were very big, because these were the major sessions, the Asia London intersect, the then this here is like the Asian close London intersect, and then this is like New York and London intersect. So these, like I said, 70% of the time there is volume in the market which you can trade. And after that, you see, it also created a similar smaller volume than the rest of the 4-hour. So 2 4-hour candles were like, let's consider consolidatory. Like, the market is, you may see the movement, but it's not the actual move that is happening in the market. It is when the market you can feel it in the market, in the price action. When you go down to smaller time frame, if you see here the 15 minutes, after that 4 hour, we slowly sort of, pushed up higher and remained in a range. This is the price action where that market is done for the day. Okay, so as I assessed, I think this comes true, and this can be 70-30 or 50-50. Sometimes 50% of the time the market can be, what do you say, range bound. I mean, that's just one extra candle. So even then you will see volume at 11:30, 15:30 and 19:30. These three candle can be the peak, trading zone areas. Okay, this is very simple, and if you keep seeing the past data, it is pointing towards a similar pattern. And I'm not saying this randomly, but I've seen this playing out for years and years. As I say, there is a innate order in the market, even though it seems chaotic when you drill down to the lower time frame. There is an innate order in the market within the chaos. So now let's go to Bitcoin chart and see how we could have capitalized. So as you can see, for yesterday I did say that BTC was going down, and I think for the first half of the day till the London New York intersect, we went down. And soon as that London New York intersect started, we started pushing price back up. And if you see, that shift happened exactly with the fresh 4-hour candle. This is why I say always go with the 4-hour candle trend. And if you can see, we saw only one candle consolidating for Bitcoin. Rest of the 6 candles we had volume, considering let's say 130 was the candle consideration for the day. 1, 2, 3, 4, 5, 6, and only one. So you can see that at least 85% of the time market had volatility yesterday. Only 15% of the time it was consolidating. The rest you could have simply traded the 4-hour bias. And if you still want to drill that down to 15 minutes, let's consider. Okay, so yeah, around this time the fresh 4-hour opened, and we had a 15-minute rejection. We just started dropping all the way till 12:30. Okay, which was the Frankfurt market open, and saw a push, and the price just sort of consolidated. Okay, let's say this is somewhat like a consolidation, because what happens is there was a huge fall. The market directly doesn't start swinging to the upside, it takes some time. Okay, like here, this was the consolidation, let's say, because we were sort of consolidating for few hours. If you see this in 1 hour now, you'll get a better picture. So 12:30 we had this bullish candle close, then 1:30, 2:30 15:30 and 16:30, you know, we sort of went sideways. If you notice, I think this 16:30 candle was a confirmation the trend was reversing. Okay, and because we saw price push up and close bullish, and then the next fresh 4 hour we opened bullish and the price went up for the next 3 hours, and the next 3 hours it went down like a consolidation, and then the same pattern. Like as I said, if this is the breakdown of that 4 hour candle in 1 hour. Okay, and if you see in 15 minutes you get precise entries. If you confluence 15 minutes with 1 hour, you can easily get trades. See here, 16:30, a new candle open, it. The price was trying to push higher, and here we created a fresh, confirmation and close the 15 minutes. Simply enter and hold. Sometimes you won't see the volume quickly. That's the thing with trading. You have to have patience, guys. You have to have patience to wait for at least 1 to 2 hours, or at minimum, or even 2 to 4 hours at minimum for a good trade to play out. And to say it in points wise, it would be like 50 to 100 points or plus. For me, that is a good trade. Anything below that capture is not worth the risk, I feel. Okay, and yeah, so I mean, this is the 15 minutes, but like you can be even more precise with this. You might see now, okay, bro, like where do I enter if you say 15 minutes? Basically what you can do is you can open a 15 minutes chart on another page and then use 1 minute for precise entry. So you know here when it closes 15 minutes bullish, you can look down to the 1 minute and you can use pivot points. Okay, I mean, the thing is sometimes pivot points can be lagging. This is why, I mean, pivot points is there for you to unconsciously learn how to identify the patterns. These pivot points are basically showing you the structural change, so you have to realize how to identify the structural change. So you can see that from 16:30 there was a fresh candle and you got a pivot signal, and you could have simply held through the next buy. Similarly, you could have, whenever you got a signal, you could have bought. Okay, and here this was the clear signal at this 17:30 candle. But see, one thing I realized yesterday while trading was this signal, it didn't come very soon. Okay, well, after the price hit around these consolidation, it showed this signal. But I realized here itself that the market was trying to push higher, but the signal came once it started consolidating here. Okay, and then you could have simply entered and put your even your stops below this level. I mean, 30 pips is a lot, but there's a stronger confirmation, I would say. Okay, so I'd say whenever you're trading, you need a strong confirmation entry model, strong confirmation or multiple confirmation, and even if it was 30 pips, your total target would be 260 points, and that is more like how much? I think 10 times of that same risk, right? So this is the advantage. 260 divided by, let's say, 30, yeah, 8 times. So it is like 1:8 trade. You're risking one time to make 8 times. And if you drill down to 1 minute after like the 1845, you get a clear rejection, you know. So yeah, this is, 8 times of the risk. 1 is to 8. And that was the move from here to here. And then we had like a minor dip, push back up, and we had a nice fall. And this was again during the fresh 4 hour play. So I mean, overall, this move and this move was a good trade, ideally for IST time zone. You could have traded these two then if you wanted, but maybe on a smaller size. Like the precise good setup, you have to size things up, and then maybe smaller setups you can use lower size. But it doesn't matter if you have a good entry model, like and right around these times, these are the fresh 1 hour shift that also happens. So you can drill down to 1 hour to place your trade. See, you after these candles, okay, market has already swinged up, and around 2030, okay, and you get a clear confirmation also. See here, at 1 minute you had a pivot rejection, and from there you could have taken like a sell position, because the next 3 candles we went down, so just simply take a position and hold, that's the knack. And then again, after this strong push down, we had like a consolidation. Then around 1:30 a.m. midnight, we got another signal, and you can see here, this was like a green confirmation close, and then 1:30 we started pushing back up. So next 3 1 hour candles you could have easily traded to the similar level, the previous level, and then you saw a rejection in 1 minute, so you can use 1 minute 1 hour too, don't have to drill down to 15 minutes. I use 15 minutes for more precision, to look how the structure is. You can break down this 1 hour by 15 minutes. You see, you get more clear price action. That's the only reason, but you can still stick to 1 hour. Okay, so now let's get on with quickly with Nasdaq and US 30. Nasdaq follows Bitcoin scenario, or Bitcoin follows Nasdaq scenario, because it's related to tech. Bitcoin, it's a technology based financial instrument. So if you see on the 4 hour, similar price action like Bitcoin till the 1430 we dipped down. And if you see Nasdaq, yesterday we had 100% of the time market creating a trend like position. There was no consolidation period at all. See, if you see the first day 1 4 hour candle open, we had a nice move down, and then another nice move down. The same next one also big during London, and London New York intersect, huge volume, good volume here. But see, today we have tight consolidation, because yesterday we had a lot of big moves. So today we might see 50 like 50% of the time market might consolidate, or the ratio may differentiate. Maybe just the 2 4 hour candle, we may see, bullish, like good price momentum. But as of now, you see the market is stuck. This is what I say. And the next volume might pop up around 12:30, 1:30. Yeah, mostly I've seen one thing is that like a pre-volume prenup comes at around 12:30 for indices especially, and then the 4:30, around that time it starts peaking. And I'm not sure why, but US 30 was a bit different from Nasdaq yesterday. US 30 rallied a lot. I mean, it should have rallied, I guess, Nasdaq too, but since we had this uh, DeepSeek LLM news from China, which is competing with OpenAI's ChatGPT, we saw this sell-off in the major tech stocks, American tech stocks. So I think that led to the fall, or else I guess we should have pushed the price back up higher. So yeah, I mean, if you see even US 30, like all of the candles yesterday we could have traded trending, and if you see, we had 1 to 2 opportunity. This is what I always say, there's always 1 to 3 max good opportunity in the market, and it's your way how you capitalize it. See, the daytime during Asian to London, Asian London and Asian close, we went down, and then during London New York intersect, we went to the upside. Simple, 2 setups. Either you had to take 2 trades and hold, or you could like keep trading once you know that trend has shifted. And how do we do that? You can do that in 1 minute, or even like the 15 minutes. See, like keep adding small positions each along the way. Okay, if you know the trend, like here you could have added 1 position, then here, things like that. I mean, for better confirmation, you can use 1 minute. See, whenever there was like a green buy, if you are trading with the trend, keep adding position in that direction. That's one way you can trade too. So as of now, we see that market is just consolidating. So today we already are having like 2 consolidation candles. I think price will sort of push lower, but yeah, let's see. Okay guys, this is it for the post market for 27th one yesterday, and today the pre-market. The thing about pre-market is, I think it's good to set a bias, but it's not good to predict the market. At least you know how the market is set up. So let's go with US 30. Let's see how it's set up. See, if you can see, yesterday was a huge bullish close for US 30 on the daily. So I am expecting either a consolidation and then move up to the upside. Okay, this is how simple your pre-analysis should be, because then you don't know what's gonna happen. Okay, you should always trade with the price action. I mean, you can set a bias. Okay, then you don't know what's gonna happen. This may consolidate and then push up higher. That's it. That's how simple it should be. Even this one, you look at the daily, and you can see that yesterday we closed bearish, so there's no way we're gonna be going up higher anytime soon. And even if we go now temporarily, we'll hit a rejection, then price trying to push lower. This is it, the bias for gold. This is how simple you should keep it. Look at daily for pre-market, and then you'll already know, okay, market is gonna push up higher, grab liquidity, then go in the direction of the trend. That'll simply create 1 to 2 good moves. This is how you should look at the market. Keep it very, very simple, and then keep trading with the trend, or hold your position. Let's see Bitcoin. And if you see 1 hour, even this is setting up for an upswing like US 30, but let's see what happens. And let's see Nasdaq. Okay, Nasdaq looks very consolidatory as of now, but if Nasdaq is gonna drop, Bitcoin is gonna follow. Okay, it's very highly correlated most of the time, and if Nasdaq sort of pushes up, then we'll see Bitcoin pushing up higher. As of now, since it's the Asian range, we won't know what is gonna happen in the market. We'll get a better clarity during the London open. Whichever direction the price starts pushing, you'll know. I mean, sometimes it creates a fake out just for few hours and then goes in the direction of the trend, but it's identifiable. It's no big worry, I feel. So we'll have to wait. As I said, patient trading is a game of being patient, and you saw by the post market analysis I showed you how many times you had to be patient. The whole of the game is about being patient and holding your trades. That's it. Even to take a trade, you have to wait for the right setup, and then for the whole setup to play out, you have to wait. See, this is the thing. It's just a waiting game. Both of the times you have to wait. Soon as you start gambling, you can gamble if you know the direction, keep adding to the position, stacking position up. But if you don't know, then so take care, guys. Let's keep optimizing and adjusting and keep journaling like this. I advise you, even you start journaling on your own. I mean, you might watch my video, but I feel by you doing it for yourself, it helps you a lot more. And also journal your trades. I mean, in a way, if it goes good, write down what's the good thing you did that your trade went as per your system. Or if you did something bad, like trading against the trend, write it down why each trade you are making the same mistakes, because usually it's the same mistakes we are creating over and over again, and until you become aware of it, you'll keep looping. This is why journaling is very important in trading. And I say psychologically it comes in the balancing part and simplifying part. Journaling pre-market and post-market helps you become more self-aware of the patterns and how you can adapt and adjust your flow to the market's flow. This is it, guys, for this video. Take care. We'll catch up soon, and I'll also be uploading the system and strategy video very soon. I already made it, so see you. Take care.